Tende, and I'll be taking you through the December 2012 Acca F5 exam. This session we shall focus on cost, volume, profit analysis, and I would encourage you to get a copy of this question paper. Now you can download that from the website, the Acca website. Okay, accaglobal.com. You can also download the answer sheet as well, which I have right here with me. Okay, and I want to spend about 15 minutes trying to read through question 1. Question 1 is called hairco. So you can pause the video, read through question 1 before you come back, and then we discuss the question. Okay. First thing for any Acca exam is try and figure out the question requirements. Now there are 4 requirements here. The first one is getting what they call a weighted average contribution to sales ratio. Weighted average contribution to sales ratio will equal to total contribution divided by total sales revenue. And then also you need to know that contribution is equal to sales price, okay, minus variable costs. So your unit contribution is equal to sales price minus variable cost, and the weighted average contribution sales ratio will be total contribution over total sales revenue. Okay. Requirement B is talking about something called break-even sales. So what is break-even? So break-even means the activity level at which profit is equal to 0. So at break-even you don't make a profit and you also don't make a loss, and it's 2 marks, so that means you shouldn't take more than 4 minutes on this. Okay, then part C, you need to use graph paper to calculate what they call a PV chart, a profit volume chart. So how will that chart look like? It will be simply on one axis you're going to have profits, then on this side you're going to have your sales. So it's going to be something like that, showing the relationship between profit and sales. Then part D, they want us to briefly comment. Okay, so you need to say something sensible about your results. So let's dive into the question. So we need to calculate the weighted average contribution to sales ratio. So one, we need to find the unit contributions. Okay, we need to determine the unit contribution for each product. Okay, so let's quickly look at the solution. Now we've been told that contribution, okay, is sales price minus the variable costs. So for each unit item, we're simply going to find the sales price and remove all the variable costs. So back to the question. So we have 3 products, C, S, and D. Okay, the sales price for each, so here we have 110. Okay, then we have 160, and then we have 120. Okay, so we have to remove the variable costs, and these are simply the material costs. So material 1, okay, we have 12. For S we have 28. Okay, for D we have 16. Material 2, similar story, we have 8, 22, 26, then skill labor 16, 34, 22, then unskilled labor 14, 20, and 28. So we're able to calculate the contribution. Okay, so if you quickly go back to the answer, you can see that's exactly what they've done. Okay, and the answers they get 60. Okay, 56, and 28. So nothing unique, as you can see. Really straightforward. We've been able to get the unit contribution: 60, 56, and 28. So what we need now to do is to find total contribution. Okay, simply multiplying the unit contribution by the sales units, and then also to find the total sales revenue, which is simply the unit selling price times the corresponding sales. Okay, so this should be straightforward, but remember, if you're not familiar, then you need to do some thorough revision to understand the key concepts. So what we're going to try and do right now is to find the total contribution. Okay, so total contribution. So we had C, okay, S, and D. The unit contributions, if you remember, were 60, 56, and 28. The sales units were 20,000, 22,000, and 26,000. So when you multiply what you expect to get Okay. So here you get 1, 2. Okay. Then 56 by 22. One, 2, 3, 2. Then 28 by 26. Okay. 7, 2, 8. So when you add up all these, you should have to get that's 1, 2, 3, 2. That's 1. What you come up with is 3160,000. So that's your total contribution. So similarly, we get total revenue. Okay. So this time we have to use the unit selling prices. So we had C, S, and D. Okay. Okay. Total. So C is 110. Okay, if we look at the question, C is 110 multiplied by 20,000. Okay, plus 160 times 22,000 plus 120 by 26,000. Okay, and so when you do that, the answer you get, okay, as total contribution should be 840,000. I hope this is straightforward. This should be straightforward. You can pause the video and see if you can come up with this figure of 884,000. That means the contribution sales ratio is going to be 3160,000. Remember, this is the figure here. Okay, divided by 8,840,000. Okay, and when you this 884,000, remember I'm getting it from this, which is the total revenue. Total revenue. So in percentage terms, okay, whatever the figure you get, you multiply it by 100%. We shall be able to get 35.75%. And so this figure here is your weighted average contribution to sales ratio. So just to wrap it up, let's look at the examiner's solution. You can see how she has laid out a solution, which is exactly what we've been doing. Find the unit contribution first, then the weight you're using, sales units. If you multiply the sales unit by the price, you get the total sales revenue, and the total contribution is the product of the contribution times the sales units. Then finally she adds up the total contribution, these figures here. You can see the same figures here. Then she divides by the total sales revenue. So you can see the total sales revenue here. Okay. So the figures we got, 3160, 8840, are the same figures you can see here. And eventually the figure comes up to 35.75%. So for quickly doing that, you'll be able to get 6 marks. Remember, this is really something very straightforward. Okay. Next, we're going to try and get the break-even sales revenue. Okay, which I'm going to call break-even. So the formula for break-even for multiple products using contribution sales ratio is simply fixed costs, okay, divided by CS ratio. Remember, we are looking at the weighted CS ratio. So what are the fixed costs? Back to the question. Now, what are the fixed costs? So you see that statement right there. The general fixed overheads are expected to be 640,000. And what is the CS ratio? We've already calculated it somewhere. Okay. The CS ratio was given as 35.75%. I hope you can remember. CS ratio is now 35.75%. Okay. Let's quickly use a calculator. So we have 640,000, and we are dividing it by 35%. That means we are dividing it by 0.3575. Okay, convert the percentage to decimals, and you can see right there that we end up with 179,029.79. Okay. And that right there is your break-even. So it's very basic. Break-even is fixed cost over CS ratio. This was a very straightforward question. And if you did your revision, surely this shouldn't have been a problem. Okay, this shouldn't have been a problem. So simply that. The next part, okay, we're trying to draw a multi-product volume chart. Okay, 1, assuming you sell the products in a constant mix, and 2, you sell the products in order of the ones with the highest contribution to sales ratio first. Okay, so the first thing we need to do Okay, we need to calculate the CS ratios for individual units. We need to calculate the CS ratios for individual units. So our products, we had C, S, D, okay. Then the contribution. So what were the unit contributions? We had, if you remember, we had 60, we had 56, and we had 28. Then what was the selling price for each? Selling price for each, back to the question, the figures are here, okay. Selling prices are right here. So we have 110, okay, we have 160, 120, okay. So contribution sales, so if we divide, okay, if we divide those figures, okay, we end up with 0.55, 0.35, and 0.23. So we need to rank. Remember, they told us to plot the one with the highest first. So our most profitable product is C, followed by S, and followed by D. Okay, so once we've done that ranking, we need to find now the profit at various intervals. That is something very simple to do, and let's quickly see how we do it. Okay, at sales is equal to 0, the profit is always equal to the fixed costs. Okay, so our profit when we are selling nothing is the fixed cost of 640,000. So we are making a loss of 640,000. Okay, so now we are making C first. We are making product C, it's most variable. So after production slash sales of 20,000 units of C, okay, the new profit figure is going to be 640,000, okay, plus the contribution from C. The contribution from C, remember the unit contribution for C is 60. Okay, so it's going to be 60 times 20,000. Now this figure here, okay, please don't get confused, that figure is simply the unit, the total contribution. That figure is total contribution from C. So what do we get? So we have 60 by 20, so 60 times 20,000, okay, minus 640, gives us a profit figure of 560,000. Okay, next we produce and sell S. So after and remember there were 22,000 units of S. Profit will be 560,000 plus the contribution from S. Now the unit contribution for S was 56 times now 22,000. Okay, and this gives you, I'll leave you to calculate that, but it gives you 1792,000. Okay, okay, then after selling 26,000 of D, okay, after selling 26,000 of D, okay, our profit, okay, will equal to 1792 plus, remember the unit contribution was 28 times 26,000 units, which is equal to 2520. Okay, now if this is confusing you, let me just state that generally profit, I'm using this equation, profit is equal to contribution minus, okay, the fixed costs. So this is the basic formula I'm trying to use. Okay, so please don't get confused about this. Profit is simply contribution minus fixed costs. Okay, so once we have that, we are almost ready to plot the graph. So we've been getting the profit figures. Okay, so we've been getting the profit figures, the cumulative profit. Okay, at activity level we started with 640. Okay, then we move to positive 560,000, then we move to 1792,000, and finally 2520,000. Okay, so we need to get the sales revenue. Okay, So this is the profit. So here we had made 0 units. Okay, the 560 came from 20,000 C. Okay, then we made 22,000 S to give us this. Then finally we sold 26,000 of D to give us 2520. Now the individual revenues which you had already calculated, from 20,000 of C we made 2.2 million. Then we made 1.2 million. Okay, sorry, this is 3520. Okay, then we made 3120. Hope you remember how we get these figures. For instance, 3120 is 26,000. Okay, multiplied by the unit selling price of D, which is 120. Okay, this gives you the 3,120,000. So let that not confuse you. So what I need to get is now this cumulative revenue. Okay, so at 0 activity level, of course the revenue here is 0. Then the revenue at this point is 2.2. Okay, then the revenue at this point, we have to add these two figures. Okay, when we add those two figures, we should be able to get 5,720,000. Now we're getting total revenue. Then these two figures, okay, we are adding them to give you the cumulative revenue. I think you remember this figure, 8840. Okay, so if we are to plot, we're going to be plotting on the x-axis, okay, the total revenue, okay, which is the coordinate 0 versus, okay, 640. Then we're going to plot this figure versus that figure. Then we're going to plot that figure versus that figure. Then finally this figure versus this figure. So let's look at the solution. Okay, so this is what we have. Briefly, as you can see, she's been doing the same thing. Okay, so she got the contribution divided by the selling price, you get the CS ratio, then the ranking, then what we've been doing, these coordinates here, as you can see as I'm highlighting, versus these coordinates, okay, which I already have. So this is how the graph looks like. Okay, this is how the graph looks like. So you have sales revenue on one side, okay, and then you have profit on the other axis, okay. So remember, we are starting with negative 640 when the revenue is 0, okay. Remember this value, 640 versus the revenue of 0. So that's a negative figure down. I don't know if you can see this, but where the mouse is rotating around, okay. Then the next point was clearly after a revenue of 2.2, okay. The profit is 560. So you can see the figure here, point C, okay. Then the next point to plot, okay, the next point to plot is a revenue of 5720, you can see somewhere here, versus a profit of 1729 somewhere here, as you can see where the mouse the pointer is hovering. Then finally point D, which is a revenue of 2.52 versus the profit of 2.52 versus the revenue of 840, okay. So then you join this by a straight line, okay, and you can see from the scale here, this is plotting the most profitable first. If you join the extreme ends, you see this point here and this point here, this dotted line is what they call the constant mix. Now please, I would advise you to actually get graph paper and try and do this using graph paper, because it's very easy to assume that you know what you're doing, but it turns out to be a disaster when you enter the exam. So we've answered part C, highest ranking contribution first, then selling the products in a constant mix, okay, and they've clearly told you only one graph is required. So that seemed a bit complicated, but it's not very complicated. The key section was figuring out the points to plot. So you need the cumulative profit right here, and then you need the cumulative revenue. That's where the complication comes in. So then we've been asked to comment. So yeah, you need to make about 2 sensible comments, okay. Briefly comment on your findings. So what have we found out? Let's look at the graph. We know that the break-even is the point at which profit is equal to 0. So you can see the solid line here, okay. When I sell the most profitable product first, okay, my break-even is much lower than when I use a constant mix. So that's the first thing we're going to say, okay. When the company sells most profitable product first, break even is much lower compared to the constant mix. So the examiner is looking for such a statement, okay. Now what we're doing here, this is an observation, okay, but you just don't leave the statement hanging. You have to try and explain why, okay. You have to try and explain why the break-even is much lower, and that's very simple. Simply because if you look at if we go back to the answer, okay, let's look at what happens to the CS ratio. You see the CS ratio of C is 0.55, but the weighted average CS ratio was 35.75. So clearly the reason is, okay, So we are justifying the above statement. This is because product C has a much higher CS ratio of 55% compared to the weighted CS ratio of 35.75%. Okay, so just making that brief remark. Okay, so briefly let's look at the examiner's solution. The commentary. Of course, you wouldn't be expected to write this, but the key points. Okay, the key points to pick out from this are, from the chart you can see break even will be at a point just under that. So the key point is this statement here. Okay, this is substantially earlier than the break-even point, which occurs if the products are sold in a constant mix, which is the statement we've made here. When the company sells most profitable product first, break-even, okay, is much lower compared to the constant mix. So we've made a very simple statement, and it captures what the examiner is looking at. Then the reason for this is because C, okay, has a higher contribution sales ratio, which is exactly what they're saying here. Okay, the weighted average is 3.5, but the CS ratio is 55% for product C. Okay, so we've gone through the question. It was this is the first time this question is being set by the current examiner, Ann Irons, and we hope to see more of such questions. Remember, she had written an article about this, but she hadn't yet set an exam. Now it has come up again. I'm not sure if it will come up again, but nevertheless, it's important to expect that you know many of the things. You can give me some feedback on john.ntende@gmail.com. Otherwise, good luck in your exams. All right, thank you.